Hey guys, welcome back to another episode with the Traders Show, brought to you by Financial Hub. The boys and I are seated back here to talk about different stuff that can help you guys improve your trading. A lot of lessons learned, wisdom and experiences that will help you improve your trading if you listen to those words and take down notes. So I'm one of your hosts. My name is Caleb Sam, and I'll let my boys introduce themselves, then we can get started on the topic for today.
So hello traders, welcome back to another episode. So like Caleb has said, my name's Kenneth Manene. We'll be discussing an interesting topic, which I'll leave my colleague to introduce.
Hello people, greetings FHub family. Happy to see you again, and I hope you're always happy to see us. It's another interesting episode. Doing what we love doing, sharing knowledge, sharing content, just around trading, business, finance, economics, geopolitics happening globally, investments, and today we're going to talk about one new investment style that is coming up, has been coming up in the recent years here in Kenya. Very interesting topic. It's pretty new because 2 years is pretty new because, we look at this industry trends forming for the long term, not really for the short term, since the licensing came in. So I think Caleb will introduce what we're going to talk about today. I'll not mention it, but I hope you've been well. My name's Atara Slawi, and I hope you learn and enjoy. Share with friends and family.
Good. So I'll do a quick intro of what it's all about, where it came from, and why it's important for you also to pay attention and other avenues that you can be watching out for. Okay. So what we're talking about today, or the topic for today, is copy trading. Okay. Copy trading. So first things first. When we say copy trading, we do not mean signals. We're not talking about signal trading. Signal trading is the one you enter into someone's either free or you pay for monthly subscription, where someone sends signals, buy here, sell here, stop loss here, TP here, such stuff. Okay, so copy trading is not that. They may sound the same, but they do not mean the same. So signal trading is totally, and we do not vouch for signal trading. We do not tell people to do it. Do not go that way. We tried it long time. My partners and I tried it when we were starting, and it didn't work well. Okay, signal trading is an avenue where you don't even understand what you're doing. It's somewhat a way of those people who get you to get rich quick or not go through the process of learning. It's like trying to do signals for medicine. Someone is telling you what to do and treating someone. There's a high chance you might do something wrong. But anyway, so today we're talking about copy trading, and copy trading is basically where you put money in your own account. You have all access to your own account, and you link your account to a professional strategy manager, as they're called, a strategy manager, where when any trade the strategy manager takes, it's duplicated on yours. So if I give a brief history before I explain deeper what copy trading is, and my partners and I will go deeper into the topic, is to take us aback of how it all came. Why wasn't it there before? Why is it here now? And what are the implications around it? So giving a brief history, when we started trading back late 2016, early 2017, the Forex market was not yet regulated here in Kenya. Okay, so the Capital Markets Authority had not yet. Forex was, I wouldn't say really new, but it was quite a new industry generally. Okay, and it took some time for the regulators, the CMA, Capital Markets Authority, to regulate it. Now, before the regulations, if anything happened, anything wrongdoing, any scam, there was no law that could take someone to court, or someone would be punished for breaking, because there's no regulation under it. Okay, so there were a lot of fraudulent activities, a lot of scammers, a lot of bad stuff going on that really gave Forex a bad name, because anyone who had Forex, they just knew it's a scam, get rich quick scheme, such stuff, pyramid scheme, etc. Okay, so fast forward into August 2017, Capital Market Authority released regulations for the Forex market, and that's when a lot of things started happening professionally. What was the first thing that happened? We started getting, first, you couldn't, for anyone who was trading for people, that was illegal unless you're licensed by the Capital Markets Authority, which we'll talk about in a different video of that process. Okay, today we're talking about copy trading. The next big step that happened, so we first stopped those fraudulent activities. The next big step that happened is that brokers from offshore markets started opening up shop in Kenya. Now, brokers used to exist, but they were not locally located here in Kenya. Okay, so if you sent your money to an offshore broker and something happened, your money is gone like that. But since now they're here locally, the CMA protects you with their laws. Anything that they do fraudulent, you can take them to court or have something happen with your lawyers and all that. So when they started their operations here in Kenya, we all know EGM Securities. They're the first one, right?
Yep.
They're the first ones to come. So they had a big market share. And that's how they started targeting the retail traders, you and I, the normal small traders. Open an account, trade with us. Basically, we need brokers to get access to the market. So for a long time, they started growing and growing. Now, remember, trading for people was revoked. Okay, so for a very long time, for about 3-4 years after their opening, since 2017, people used to trade, and a big percentage of traders lose money. Okay, a big percentage, almost 90 to 95. I don't have the pure statistics, but I believe it's more than 90% of traders will always blow their money. So more money is lost than what is actually made in the retail space. Okay, so with this in place, okay, and people cannot be traded for, and the license is it's a big process. It's a very long, tough process to get a license. You need to have certain criteria. So in Kenya, so far, we just have 1 or 2 licensed traders. So far, since 2017 to 2024, we've only had 2 licensed people who can trade for you, and you can go online and search them up. But if you can imagine, almost that span, that's about 7-8 years. Yep. We've only had 2, and in that same time, we've had how many brokers? About 10 plus?
10,
Close to 10.
Yeah, 10 plus. We have... Those are the amount of brokers, meaning the retail space is really huge. So with many people losing money, the brokers or the people sat down, okay? And this is also what we are being explained to by the different brokers. And CMA they came and looked at their books, and you can see easily that there are very few people making money and very many people losing money. So we wanted to find a way of how we can protect people from losing all their money. So they came up with this product. It's not that they came up with it and innovated it. It's a product that used to exist, but now they sort of came to allow brokers to allow this product to the retail traders, where the few people who are making money can be able to trade for people who have money, okay, but are not good at trading yet, okay? Not by this person giving their money, because for me or anyone to take your capital, your money, they must have a license. If you're exchanging money, have to have a license. So this other one, they came up with on their site, okay? You can go and see different traders. You're put on sort of like a leaderboard or performance, okay? Or every trader who's stamped as a strategy manager has a certain link where you can see their performance, okay? Now, if you see their performance, you look at different things. See how long have they been trading. So this is live trading, not demo trading, not those ones. Live performance trading. What are their returns during that time frame they've traded? What is their risk? What is their profit share that they're willing, which we'll talk about later on as we continue talking. You look at different stuff on that. So you, the investor, get convinced that, okay, this person is trading how I want. These are the returns promised, because different traders, different returns on different time frames, and then different risk management. So if you're comfortable with all that and the profit share, then you open your own account, okay? Then your account, you link your account to this trader strategy manager. And any trade the strategy manager takes, this trader also, not this trader, the investor, same trades are also executed on the account. So if the trader continues making profit, it's made on the investor side. So in a big nutshell, that is what copy trading is all about, where it's basically a professional strategy manager takes trades and you link your account to them. So this is a product that a lot of brokers are offering, and now they're linking professional traders to retail investors or retail traders who are looking to have another source of income, source of investment, and diversify your portfolio, okay? So in a start, I can start with that.
Here at Financial Hub, we offer the first 2 classes of our masterclass for free. In the first class, Introduction to Trading, you learn the initial overview of the concepts, principles, and practices involved in trading. In the second class, Fundamental Analysis, you learn the underlying factors driving supply and demand in the markets. You can get in touch with us by calling the number below or filling the form in the description box. Or you can visit our offices at Lavington Mall, Chandarana Building, 4th floor, office number 401.
Yep, so I think Caleb has done a good job of explaining in a nutshell what copy trading really is. And I think where I'd want to start is what really defines a professional trader, because I find it that there are very many people who are interested in looking for that professional trader, but they don't even understand what defines a professional. You know, a professional is not necessarily defined by the returns they are making or by the systems they are using or by how they present themselves. It's a combination of things, and you need to be able to think from those things so that you don't give your money to someone and then it disappears. Because I've seen a couple of people who've lost money on the copy trading side, and the reason they lost money at first was it was very clear that you will lose money if you invested in this person from the pattern that existed in his behavior of trading.
Good point.
So I think to start off, I'd say people need to understand that one, past results are not a guarantee of future results. That's the first thing that people need to understand. Just because for the last 2, 3, 4, 5 months I've made money does not mean I'll keep on making money years down the line. Okay, it shows some credibility, because if I've been able to make money, 2, 3, 4, 5 months, then there's some credibility there. But you also need to understand what the credibility is. Is this person generally good at picking trades? Is this person generally good at managing risk? Is this person good at allocating? Or was this person just favored with the market? Because you could find someone has made 15% return in a bull market. So this guy has been buying a market that has been going up and up and up. So he's only making money as a function of being on the right side of the market, not as a function of skill. Okay, so I'd start off with that. Like, we need to be able to define, and I think I'd want to hear what you guys will say with that. Like, we need to be able to define a professional trader. And for me, a professional trader is someone who, one, understands risk from a very, very deep perspective. I don't think risk is necessarily, I risk 1% or I don't expose more than 2%. I think that's a very, very limited way of thinking about risk. Like, that's the black and white thinking. But I think if you think about risk, there's psychological risk, there's the risk of underperforming, there's the risk of fear. Now you're managing other people's money, they have expectations, so those are risks. There's the risk that you'll start doing what clients want you to do rather than what you'll be done in the markets. So there's a lot. If you just unpack that thing and you think about it from a professional perspective, there's a lot. And I think that for me, what I'd recommend is most people need to consult professionals before they start copying someone. Before you decide, I'm going to put my money here, you need to be able to understand, because I've figured out most people don't understand what they're investing in, and that's why you'll find people coming in with realistic returns. For example, you could easily tell someone, if you invest in my copy, I'll give you 10 to 15% per quarter, which is a very, 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 very huge return. Like, you're beating markets, you're beating most investments out there if you can be able to do that and do it consistently. But someone will still say, hey, ni kidogo, I expected more, or at least I was anticipating for more returns. And that has really made me understand that most people don't have the slightest idea of how money really works and how investing really works. The only form of investing we are exposed to is the one of buying land, building a home, like the normal idea we have of investing. But if you think about, putting your money in a money market fund, or putting your money in the FX business or any other business, then the returns are not as dramatic as people might think. And nowadays I even joke to people that I know you thought this thing will make you rich fast, but sorry to tell you, this thing will make you rich slowly. It's not a quick fix. Kama ulikuwa na shida yenye ulikuwa unataka 1-2 umalize hizo shida, haiwaki hivyo. It's something that needs a lot of time, and you slowly but surely are able to get into it. So I think I'd start with that. I'd start with people need to do more research on what it means to look for a professional trader. Because if you look at some of the platforms that are there and what those platforms offer from a data perspective or a data point, some of those metrics are not even realistic. Like, for example, you'll find a platform that only tells you how much return this person has. That does not tell you how much risk this person has in order to generate that return.
Some platforms don't show?
Yeah. So they don't show you how much risk someone is taking for them to be able to generate this return. You'll find someone is up 30, 40, 50% in 3 months. That to me tells me this guy is taking huge risks, because I understand markets. But you'll find someone who doesn't understand, yes, is attracted more into that because he thinks this other guy, yes, he's making money, but very little. This other one is making money, but very much so. And then people lie to themselves, this thing of high risk, high reward. Your high risk, high reward is a fallacy. If you don't know what you're doing, you don't even know what is the definition of high risk.
If you're investing $1 million, you wouldn't go for high risk, high reward.
Exactly. Like if you are
high risk,
high reward.
If you just go for high risk, high reward when you have small money.
Yeah. In simple terms, it's a form of greed being expressed in a logical, rational manner. You're trying to mask your greed in some explanation of unajua bila high risk. No, it doesn't work like that.
Okay. Story.
Yeah, so I feel like that's where people need to start. Like my first point would be people need to understand really what defines a professional trader and what defines a good track record. Buffett normally says any track record that's below 5 years is not a track record. You have not proven anything. So
long term.
Yeah, this idea of you have a track record of 2 months and you think you've figured out trading, you're still far away from
profitability.
Yeah, you're still far away from, and you've started raising money. Probably you've traded now for 6 months, 2 months, you're profitable. Month number 9, umeanza raise do from other people. You're just setting up yourself for chaos and failure. So I think that would be my first point. Anyone who's interested in investing in copy trading, you need to define what a professional trader is and what defines a good track record, because I feel like that's the first starting point where people go wrong.
Nice. So I think both of you have done a big part of what actually also to add on. But for me, again, I'll just start off from probably just where you started from. What is copy trading? And because for me, I look at it as it's a new concept, especially in the Kenyan market. In outside markets, I think it was allowed, but brokers were not. The moment regulations came in, they were not allowed to offer copy trading initially. And now that it has been opened, I feel like, again, from a big picture perspective, I feel like, in my own personal opinion, it still carries a heavy risk, especially to the clients or to the investors. Because again, it has come up again with very minimal barriers to entry. Like they'll just tell you, deposit $1,000.
Yeah.
After 50 days of trading, and you're allowed to become a strategy provider. I feel like from a top point of view, it
wasn't 50 days, it was 50 trades.
50 trades.
After 50 trades.
Yeah,
some
so
brokers.
50 trades.
Yeah, 50 trades.
So if I execute 50 trades in a week, I'm okay.
Yeah, you're fine. You've started.
$1,000 and
see the matrix.
50 trades, you see. So for me, I see it that it brings in so much risk still, because it's still a form of investment, similar to just using a PAM system, or because you're dealing with people's money. And people, one thing I've come to realize is people are so attached to their money. People are not as risk taking as people think they are. Even you at a personal level where you're sitting down, you might think I'm okay with taking risks, but the moment those risks start to materialize, you start to, chicken out. Okay. Yeah, you start to realize you're not okay. And that even happens in trading, even for us as traders. Most times we accept a risk as we take a trade, but the moment we are in, we start feeling fearful again of losing. See? And I think as traders, you need to work around such things on your psychology. So for me, I look at copy trading as a really, really interesting concept. If you can be able, as you guys have said, how can you pinpoint a professional trader? What metrics are you looking for? Do you have the investor knowledge to know what you're investing in? Because, you might get into copy trading, but you need to understand some basic concepts of investments. You need to understand something like what is leverage, because you're investing into a leveraged product. The risk on leveraged products are way, way higher than the risks on cash products like land, stocks in Kenya, MFF, the CBK bonds. Leveraged products are heavily risky. So you might find, okay, maybe you're telling me I don't need to, learn a lot about trading, the technicalities of trading, the fundamentals of trading, the psychology, the risk and everything. But I feel like it's very hard for you to cheat the game at a personal level. Like for you just cheat the markets and, you're just making money by just, being somewhere, cozy and always chilling and, Ken is working for me. You need to understand, even at a, light level, what is Ken doing? You see? You need to sit down with Ken probably, and he'll explain to you what are the risks in the markets. how long should you keep your investments here? What return should you be expecting? Because again, as I've been talking with a lot of clients or people interested in copy trading, there are some common questions that I get, and this shows me directly you don't know what you're trying to invest in. You see, you've just heard there's a way we can make money, and you've rushed through it. Because someone will ask you something like, okay, so are returns guaranteed? You see? So maybe we can answer such questions later. Another question which I've gotten is who bears the risk as we get into the deal? And there are so many things again around copy trading that we really need to understand. Because also for us, we took some time before we got into it, because it came about 2 years ago. But even until now, we're still, just trying to understand the concept, how to deal with everything, how to deal with brokers, clients. So it's still, for us, we're still very, very low-key around it. Just trying to understand the market, the industry, the risks which are there, knowing who you can deal with, who you cannot deal with. And you come to realize very quickly that even from a return perspective, as you're saying, Ken, most traders don't understand the risk-adjusted return. And most traders, again, don't understand how money is made in the markets. So I always believe in trading from how it has been structured from millennials ago. I think trading is a big money game. So it's not a game whereby now, a friend of mine comes and tells me, Taras, I have some $100 lying somewhere. Tufanyaje nayo sasa? I hear you're a good trader. Yeah? How much can we make after 3 months? You see, if you tell that person you'll make him $10, 10%, it's like, you guys, you're joking with my money. So there's a lot of, as all these investment avenues come in and new innovation come in very many sectors. In cryptos, we are having things coming up, ETFs and everything. I feel like the first thing, even before you start thinking of how much I can make, is what Ken said. Do you know what you're getting yourself into? Have you accepted the risks involved? As I was saying, in leverage markets, us ourselves, we've accepted. And we know how to manage those risks. And that is why you might find, as we take higher risks, that is why we should be compensated more for taking higher risks. And that is why it's easier for leverage products, again, to beat other markets when you have the skill. So I can say it's a good concept, yes, but it carries high level of risk due to the minimum or little to no barrier of entry. Just capital, $1,000 for most firms that I know, and a couple of trading days. Then you'll be ranked according to your risk levels. So a lot of what I want to pass along to people who probably want to be getting into copy trading is, just as Ken said, try and get the metrics of what criteria are you choosing to measure or to gauge this trader is good. Not just the trader at the top of the leaderboard is the one you should rush to give your money. You might even have to give the number 20, but his risk level is 1 or maximum 2.
Yeah.
Then give a number 1 who has a 5 risk level.
Yep.
You see, because I think the risk levels are mostly measured from 1 to 5. 5 being the highest risk, 1 being normal or a low risk system. So for me, yes, I'll still advise people to, not shy off from copy trading. It's very, very good, especially for people who you can even have the skill actually. Maybe you've come for maybe an FAB course, you've learned trading, but you are doing a very heavy job. You see, maybe you're a pilot, or maybe you're a journalist. I think we've mentored a lot of corporate people. Someone who is working a 9 to 5, they come for classes at 6. So these people they understand what they're doing, yes. So first of all, I think the best way to do that is understand markets just from a basic level. Then now you can trust other people now to do it for you. Not just that, okay, me, I don't know even what is Forex. I don't know, what is margin, what is leverage. And, I just gave Ken $1,000 and, he'll make me money. That is now when that risk materializes, you'll now come and tell Ken, hey, no. We are not agreed on this. You see? So I think that investor knowledge is very, very critical, very, very important for you to understand what you're getting yourself into, even when the risk materializes. And this is a question probably, again, I might even ask the viewers and, you can probably give your comments in the or your thoughts in the comment section. Is for a certain investment, let's say for a copy trading investment, whereby maybe a trader promises you 25-30% per annum, what risk level are you willing to stomach or to take within that period? You can give your thoughts in the comments below. I think I can start there.
Yeah. Also me now on my comment, other than explaining what copy trading is, and I think this is something we should come up with, education, investor education. Like it's just echoing what Ken and Taras are saying. When you enter, what should you look at? How will I? If you don't know, you don't know. So even if you get someone who's shown 100% return in a year, you don't know what Ken is saying. Did you look at risk? Did you look at other things that were happening behind the scenes in order to achieve that return? Maybe that return was just achieved in a matter of the whole year. The guy was down actually. Then 1 month up 100%. So already that's crazy risk, okay? Risk taking, because if you went up 100% easily, you can easily go down the opposite way. So it's about investor education or copy trading investor education. What you should look at, how you should look at. It's just like us, the way we teach. We have a course on prop firms, and in part of the prop firms, we help you choose how to understand how to choose a reputable and good prop firm in the long term. So same thing also on copy trading. You should know how to choose. It's not a matter of just returns, and I think that's what a lot of investors make the mistake for. Just looking at returns, but not looking at the other side. I think you should go deeper, get to know who you're investing with. If you're able, if you're in the same country and it's a local person, try and look how has this person been trading. Try to get to know them. If you can, it's not mandatory, but if you can, it's just easier for more understanding and getting an understanding of their approach, maybe even their strategy, what they're using, how to diversify. It's just like trading with prop firms. We teach a lot on how to diversify. Don't focus too much on one prop firm just in case. So also in copy trading, the same. Also diversify. Don't just put all. So those are things. It's a new industry. People are really doing it a lot. And also something I saw that it's like what Taras and Ken are saying. Someone who just came and has a track record for 1 month and you're copying, give it time. Okay, not necessarily 5 years, because that will take a lot of time. But see good enough data. See the risk in the long term. Because we've seen many on my FX book. We've seen a lot of traders who are trading well, then all lost it in one day. The biggest person we ever saw, he had taken his account to 10 million. Was it 10 million?
Yeah, 10.
And it had taken time.
Since around 2014.
Yeah, it had taken time. Then in one trade, we can't forget, it was USD JPY. It was a JPY
Just remember
pair.
it was US elections.
It was US elections.
Yeah,
I think it was USD JPY. I know there was a JPY pair there. Instantly lost all of it in one trade. All of it. Until people in the comments were like, what happened? What is it? But anyway, so investor education on the copy trading is also very important. And that's something also we're looking to help and also help navigate. We help, we sit you down, talk to you, show you what you can do, what to look out for. Other thing that we haven't talked about also, different people also ask for different investments. Minimum investment. Find someone saying, copy trade me with minimum $50. I'll show you how to, and then you see the account is showing 1,000% return. So someone has calculated this $50 is going to go to $500. It's going to go. So also take care of that. Look at the years this person has been trading. Just because you opened an account, what Ken was saying, for 2 months and it's profitable, doesn't mean necessarily in the long term I'll be profitable. Look at many other stuff, which we'll talk about when you guys come to our office and we sit down and talk. But that was on my point on copy trading, my last point.
Yep, so I think for me what I'd summarize up with is for the professional trader or for us traders, this is a very good opportunity if well utilized. I feel like there are very many traders who know are not competent yet, but they're pursuing those opportunities. Or rather, there are very many traders who mistake money for the skill, or you think that because you have a lot of money, you'll have the skill. That's not how it works. I think you need to build the skill first, and then you can raise the capital. If you build the skill, the capital will take care of itself. So for me, what I'd encourage most traders who are looking to get into that is, 1, understand that. 2, structure your business like a business. Like, Don't run it like a kiosk, whereby if you make money, you want to talk to people. If you lose money, you're disappearing and not communicating. Don't do those things. Like, strive as much as possible to run it like a business. Don't take up clients who don't understand what you're doing. If you meet up with someone, just don't take up that client, because it's stress you're bringing to yourself. So try as much as possible to take only clients that at least align with what you're trying to do, people who understand that what you're doing is long term, someone who's not in a hurry to make money. Because you'll find, I remember there was a time we were speaking and one of the licensed money managers was telling me, sometimes it's very funny, someone wants to pay their mortgage off your trading. So if you meet such a client, mwambie tu, hey, usinieke stress yako ya mortgage, mimi natafuta yangu ya kutrade. You just look for your mortgage money somewhere else. But by the end of the day, I feel like it is a good opportunity if well utilized. If well utilized, you can do something out of it. If poorly utilized, you'll just create more chaos, more drama, and probably more pain for people, which is not a good thing. And especially if you knew that thing, like if you had seen that risk and you still did it, I feel like you're making a terrible mistake. So that would be my parting shot with regards to copy trading.
For me, closing remarks is, closing remarks, I think I can say one more thing. It's a question I've also been getting about, what is the legality of this product from a legal perspective? And I think the CMA and the brokers, because it's happening only with licensed brokers. So it doesn't really require any legalities from a trader's side, because the trader is not trying to solicit you to, he's not telling you, Caleb, there's an investment here, we'll make money. So it's probably someone can just, publish their own track record, publish their own performance. Even the brokers will do that on their own side. And it's for you to, at your own, consent, understanding, and risk acceptance, you will agree that, okay, I will copy Ken's strategy. And you don't even have to actually to know it's Ken. Ken can have write, his name as trend follower. And you yourself decide, as after seeing Ken's performance, I have accepted that I can take this maximum risk, maybe 15%. I tried with Ken, maybe 15% I tried with Caleb, another 15% I tried with Trader Z. So that is the legality of copy trading. It's you, the investor yourself, agreeing to take the risk. You see? And that is why I think for the copy trading firms we've seen, or we're trying to work with, a lot of they offer you a maximum risk that you're willing to take overall in a trade. So at least you have some level of control again on your capital, so you can know, okay, if this trader loses maybe 15%, I'm uncopying them. I'm leaving probably their system and looking for other systems. But yeah, I feel like there's a lot of things to still, as Caleb said, to learn, to make people learn about copy trading. Because again, there's that story where we're always saying of investors or people copying you will want to always, actively monitor who is making money. You see, so let's say you're copying me, Ken, and Caleb. Then this week, Taras loses money in the markets. You remove your money from Taras this week, you take it to Caleb next week. Next week, Caleb again loses. And Ken makes money that week. You're like, I didn't give Ken. So you remove yours again, you take it to Ken. So again, I feel like it's for it to work well. And that is, again, I think, not really us can do a lot of the education on ourselves. I feel like the parties, the brokers and the regulators are the ones to, push for that investor knowledge. Because the broker should be able to tell this person if you're copying, yes, you have the liberty to get out of any system or any trader, but investments are not weekly based or monthly based or even quarterly based. I might have not made money for the first quarter, then I make money for the next of the 3 quarters. Someone can make money the first quarter and not make anything the next 3 quarters. So again, you should be able to, sit well with taking risks more than looking for returns every day or every week. You'll find yourself probably trying to always look for who is making returns. and not, okay, who is managing risk better. So I think majorly as a new product comes in, always has a lot of, cons more than pros. But I feel like for this one, it has a lot of pros more than cons if we can all take it slow, understand the market, as Ken said, even for traders. Because, I've seen traders, they have not traded even for a year. Huko ndani. Mimi mwenyewe siko. You see? And I've been here for 7 years.
Yep.
So, take things slow because, again, it might, because regulators always follow, complaints and if a product is working or not working. And if this again continues, you open certain leaderboard and 99% loss, 99% loss, 99% loss, you might easily again make the regulators revoke this product because now they can say, we don't trust they are good traders here at this point yet. And the way this product is a very good product because it has allowed us now to sort of get into money management without taking your money. So because money management again still is a big part of what we are working on in the long term, but this is a very good starting point, because you learn how to deal with investors, you learn how to deal with your risk in the markets, your psychology, all that underperformance. Sometimes you've performed too well, and investors expect you to continue doing like that. So it's a really good starting point for professional traders to start as they get to the money management level and then into the institutional level of trading, because I always believe professional traders are heavily on institutional level of trading more than on retail. So that is what I can say for today. Thank you so much for listening. I'll catch you guys in the next one.
Yeah, so as we finish, as we always say, stay woke, stay financially literate, may the peeps be with you.